Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Let's fix our screen here. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Hope you all had a great weekend. We are waking up this morning to another volatile market. We are down. Had some good action. Overnight. We're going to talk about the action on Friday into the close, the action last night into this morning. Got some individual movers on our mind. Got oil on our mind. We are up above $70 a barrel in oil. Okay, oil is back. We're going to talk Bitcoin. It's a big week this week. I mentioned this at the close on Friday. Big week for analyst and investor presentations. There's like 20 this week on my list of investor days and analyst days this week. So I want to mention that. GameStop had a headline, so we'll talk about that. Our guest today is Tim Quast. He is the founder of Market Structure Edge. He would join the show at 8:35. On that note, today's show is sponsored by Market Structure Edge. It is the first decision support platform for traders built on market structure. To learn more, go to marketstructureedge.com. There's a link up on the screen right there. Let's throw it to Joel. Joel, how are we doing this morning in the overnight trading session?
Rough overnight session, Spencer. We traded up to 66 and a quarter. That's 38, 66 and a quarter on the stimulus package, but some overnight attacks on an oil facility and just general malaise in the market. We sold off 70 handles to 36.96 and a quarter. So here we are. We're bouncing back into 3,800, much closer to the low than the high. Crude oil futures, they were $2 higher. They went up as high as 67.98. Back down, now red on the session. Gold was over 1,700. Now back in the 1,600 handle, down $13.50 at 1685.40. Silver clinging to $25. That's down 22 cents at 25.07. And Bitcoin back over 50,000, up $1,150 at 50,700. Rollover week, Dennis, and boy, oh boy, we're finding the air pockets in the market on Friday and today as well. Yeah. The futures contract rolled over on start Wednesday, Thursday. You'll start trading the June contract.
Yeah, I mean, this, is obviously we're going to continue to see volatility, and the air pockets are everywhere because we've had continued volatility here. So just blindly chasing Friday's rally, right up to the highs, like it was overdone. So now you get some backing and filling, though. So I would say not so much looking at SPY, but have your list. I mean, now at least we have a tradable bottom, because if you were coming in and buying before Friday, you're trying, I even tried at Thursday's lows, and they took those out, and I got stopped out, on a couple day trades there. So I thought, well, maybe we'll bounce at Thursday's lows, and we didn't. We took those out. But then we had the wicked, 2.5 hour rally all afternoon. So now you look like you had kind of the washout low, at least in some of the Cathy names, because some of these Cathy stocks have been hammered for 20, 30, 40%. Not all of them, but some of them have for sure. I mean, her fund itself was down, I think, almost 30% at the lows there on Friday. So, a lot of the holdings are down 40 or 50%. Yeah, 159 on ARKK, all the way down to 106. I think we had the washout Cathy low there, 106 and a quarter on ARKK. So, some of those holdings, I think you're going to find buyers into some of these stocks. Now, am I jumping in the high multiple names here? No, but have your list. If you have stocks and you're sitting with a lot of cash and you want to find some good companies, there are some stocks that are definitely on sale right now. So maybe that's what you look at. Get your list, and use maybe these opportunities. Today's pullback feels more like a buying opportunity than it did on Friday. I'll say that much.
Yeah, Friday, they did get it start to go towards Thursday's low. Not sure what turned us around, but just a little bit. People got leaning to the short side when we looked like we were going to take out Thursday's low, and I'll just tell you that rally on Friday was just mind-boggling. I mean, 120 off the low. Don't like to see that. I'd rather see us, like you said, do the back and fill here. Have a couple days where, less volatility. It's hard to when you have those big moves with the volatility. As you can see, it's hard to hold them, even with the stimulus package getting passed over the weekend. Seemed to be old news, but
Yeah.
how
many times can we rally on stimulus?
I don't know.
I mean that obviously it's done. I mean, you can see you're not rallying on stimulus anymore. Anybody who bought the S&Ps open when we went up 30 handles, we literally were up at one point almost 30 handles here. You're down 50 points. What are we off the overnight low? 45? Off the lows?
We're 20 off the lows and we're 50 off the highs.
50 off the highs. You got to watch chasing. I mean, think about what you were buying if you were buying S&Ps on that futures open at 38.50. You're buying it up within 2-3% of the all-time highs when you have underneath, lift up and take a look underneath the hood. And you literally have, carnage in a lot of stocks. So coming in and paying up 385 for your spies or 386 for your spy equivalent, it's not advisable to chase. You're literally chasing at 100 points from where we were Friday. You want to buy the dips and sell the rips. Don't buy the rip on top of the rip. Like we had a huge rip on Friday afternoon, and then we ripped again at the S&P futures open on Sunday night. That was another selling opportunity. But again, I'm going to go back and say, I feel like now there are some opportunities. And again, you've got to pick your stocks. If you're jumping into the value names here, I still think that trade is crowded. I think you start looking at some of the tech names. I do think you start just nibbling into some of the tech names. There's been just so many stocks. Like you can bring up any growth tech has been hammered, but there's been a lot of other stocks too. I mean, Mitch, you were talking about some of the solar stocks. I mean, here, I still think solar is not going away. I don't think solar is over. And if you look at the TAN, we gave back 3 months of gains in the TAN in the better part of 2 weeks. You got down near great support around that 80.
80, yep.
It gets up to 87.48. Now you're pulling back $2-3. So jump in, maybe maybe you nibble into some of these names. SunPower or our First Solar gets an upgrade here this morning. So even though it's still trading down, but that was 110. Now you get down under 70. I mean, these are the kind of names that maybe I nibble into. Maybe I just go into the TAN if I don't want to start picking on specific solar names. Just nibbling, not going all in, not getting on margin, and this is the opportunity, and we're ripping higher. Exactly. It's a lot of people underwater. It's not going to just be easy sledding all-time highs. But I think if you're sitting with a lot of cash, I've raised a lot of cash in the last few weeks, as I was talking about. I think I start deploying a little bit of that this morning.
All right. Well, SPWR, that was over 55, hit a nice bounce. I mean, you're looking at a lot of these charts too, and the lows are an area of other lows. So, I mean, it like you said, you look for an area to lean on. You have the lows, and I mean, it's big tech. I mean, I still want to see that turn around, right? I mean, your Apples. I've been keeping an eye on this. This is the only thing that I just nibbled in a little bit on Friday. And the fact that the market.
What was that? What stock?
Apple, a little bit of Apple.
Bottle of Apple.
For a little swing because it took out that low, that undercut the low from to a week and a half ago. And I don't know. It just feels like it's holding up. Feels like it got beat up after earnings. But just where it is and, where the out is, it breaches 118. Getting it into 119 handle. That chart looked good to me. Mr. Softy, we have some news on Mr. Softy, don't we? Have another hack or something? Spencer, did I hear that? I thought
this was Friday. They've been talking about it nonstop on CNBC. So
I know it was Friday.
But it was Friday. So we already knew about the hack. I guess maybe it was a little worse than we originally thought. So they're hitting Microsoft and they're buying some of your cyber. Yep. FireEye's getting a little bit of a bid. CyberArk is catching a little bit of a bid this morning. At least it was. But they're jumping into FireEye, FEYE. It's up 50 cents. So more hacks. But is that a stock? I mean, let's go to FireEye. Just talk technicals without the hack. I mean, you had a move from basically a breakout through 16, a ridiculous 3-day move to 26, which was just, when we all thought it's all about hacks. And, we've given back over half that move. 8 points. Well, you're giving back the majority of that move. So at a certain point in time, I don't think it's getting back to 16. I'd be a buyer of FireEye if it got back to 16. 1890 or a little bit, but is that 18 low from Friday? Is that safe for now, you think, Joel? I think it could
Look at
be.
that. I mean, almost all these stocks, like you look at this one, had a low at 1785, low on Friday, 1788. So yeah, it's
Where'd you
not,
grab that 1780? Oh, that low from that
yeah,
one
right
day there.
here after
Yeah,
that first big
December.
update, 1785. So if you're keeping an eye on, I mean, this was a big candle. This was a big breakout. Just been dying to break out over 16, and it finally got that. But once again, identifiable areas with the low, you match the low. I mean, obviously, no such thing as a triple bottom, but these stocks have distanced themselves. And when Dennis is talking about people that feel that they missed the low, what this is trading up 1963. I mean, maybe people are going to step up to the close of 1898 or anywhere near $19. I mean, it sure doesn't feel with the news that you're going to get back down to Friday's low. We're even starting to creep up now a little bit as we speak. The S&Ps are trying to get back to mid-range on the session. And like I said, we've already traded almost the 9-day average trading range. Also, folks, just, you do have a rollover. And that's when the futures contract go from the March to June. So the volume, if you want to take your position in the March, in the June, you're long the March, you got to sell the March and buy the June, and vice versa. That creates certain air pockets in the market. That's what you saw on Friday. So I think we're in for a couple choppy days here.
Yeah.
We might not even get anywhere near the low from Friday, and that Monday's high is going to be a tough nut to crack right now.
I don't think we're getting near Friday's lows. I think you're going to see, if you look just at the Qs, and obviously you can pick your tech stock that you want to dip, but we had the low on Thursday, $300.11. How low have we been here overnight in the Qs? Like just, since 4 a.m.? Do you have that?
Yeah, I could pull that.
I would think there's going to be buyers near 300, like all kinds of buyers near 300 now in the Qs. That's kind of where we bottomed out in December there. I know we cut it out. So I don't think we get down to Friday's low. I think Friday's 302, and you're already finding buyers step in. I think that it's already the proof is in the pudding, right? I already think you're seeing buyers step up towards that 300 area. So I think if you're waiting for Friday's lows, I don't think you get there. I think you got to step in before that. I wouldn't be surprised if we see actually this market turn green today. It wouldn't surprise me. I'm not calling it and saying it's going to do anything for sure, but I'm saying if you got a lot of cash, I think you deploy a little bit of it here this morning. So this is a better opportunity than it was buying Friday afternoon right at the top of the rally. So it was a wicked rally. So they got some people that are like, okay, I've got a little pullback here now. That buy the dip mentality. I think they step in. So individual stock stories. Rocket, want to go to Rocket?
Sure, trading up 52 cents after that dividend.
Yeah, and this is a trade that I made, and this is what I mean by an edge. So here's my thought process. I bought a whole pile of Rocket on the close, 25.10. You can say, well, you're an idiot. You're down 60 cents. No, because it was paying a special dividend. I believe the dividend was $1.11.
I think so.
My thought process was they're going to come in. So the adjusted close, Rocket's going to adjust down. Close 25.10. I bought it on the close. And, the adjusted close is going to end up being $23.99. And I'm like, there's going to be people who are going to come in and see Rocket under 25 and be buyers. So my thought process was they aren't going to care if they're not getting the dividend. They're probably going to bid it up. So I've already sold into the rally here this morning. I already banked the 50 cents. But I just, I was thinking this is going to be a good candidate that it's not going to go down as much as a special dividend. So I collect the $1.11 and, I lose a little bit on the stock price, but, net, I'm making 50 cents here. So, anyways, that's the kind of edges I look for, just looking at, that's called dividend capture. That's called dividend capture, the strategy. It works well on a prop account because I'm 100% taxed on everything, so I don't have to consider implications of a dividend versus capital gains or anything like that. I'm 100% taxed on everything, so I don't have to think about any of that. It's just money is money. So $1.11, I take in, I lose 50 cents on the stock or 60 cents on the stock. So I'm making 50 cents. So
and
anyway.
What about all the shorts out there? Anybody that had the guts to short into that crazy rally last week? They're looking, hey, dividend, no dividend, have to pay it out, obviously, but opportunity trading up. And you said the adjusted close is 23.99 on that because there was a buck.
Yeah,
11.
$23.99, and I think you'll find buyers starting around here in Rocket. I have a long-standing order down at 21. If it was to get washed out, which I was hoping, I put a whole pile of orders out there just if it really got stupid, like on the washouts. Like I threw out Rocket at 21. This was like maybe Thursday. I threw them out GTC. It might have even been Wednesday just in case it got crazy. I had Marvel out there. Didn't quite get down to the Marvel I had at 36, and I got down to 37.92. It's a stock I've wanted to own for a long time, MRVL. I still think they're going to benefit. I don't think 5G is going away. And that's a whole nother conversation in itself. But again, I just throw out the discounted limit orders out there on my long-term account. And if it gets to a good level, I'm willing to come in something like that. But these are Marvel, MRVL. It's not a stock that's trading 50 times sales. Am I coming in Airbnb here this morning? No. I still think there's a huge bubble in a lot of these stocks. Airbnb, is it going to come back when the market comes back? Sure it is. But when you're trading at these ridiculous prices, these are the kind of stocks that were completely under attack. So those aren't the ones I just want to jump into. It's got to be a reasonable valuation. I'm all about growth at a reasonable price, not growth at any cost. Kathy just wants to buy growth. She don't care. It's going to grow into it. Works awesome in a bull market. Doesn't work so well, when you get a significant pullback like we saw. So I'm always about GARP, growth at a reasonable price. I love growth, but I don't want to pay 100 times sales or 80 times sales or 50 times sales for it, because I went through the tech bubble back in 2000. I watched all those ones that you're paying 50, 60, 70 times sales blow up. And, a lot of those companies are still around here today, but some of them never got back to the valuations they were trading for. A lot of them did, but took 20 years later. So you got to be careful paying up too much.
You mentioned the Airbnb. I think it Dash, because then they go to IPO like around the same day. That stock is not doing well at all. I don't know what that moved to 260, but you're right back here at the IPO lows. Every time I see these commercials and stuff, and like they're like McDonald's, like who's gonna how lazy do you have to be to have to get DoorDash to get McDonald's delivered to you? I mean, I know I just don't understand. And then you're paying up. Like, what's a McDonald's? What do they charge on DoorDash?
There's a huge premium on those DoorDash orders.
What is I mean,
it's a big premium, Joel. I think it's like 30% or more.
30%. So if
it's a lot. Spencer, do you know?
I don't top of my head, I don't know, but I've done it before.
I think it's different. Like it's still, it's not like it's not a pure cut formula here. It's a lot. Somebody knows in the chat, but I think I've heard as much as 30%.
There was a tweet that went viral last year. A restaurant owner had tweeted out a breakdown, like a really large order that had come in through DoorDash. And they tweeted out like fees for this, take that out, take that out, take that out. And by the end, they were left with like a fraction of the total. They being the restaurant were left with a fraction of like the total earnings from the order, because DoorDash and other fees had taken out most of it. But yeah, they do. I mean, they charge you. It's a convenience, and they definitely charge you for it. So
let's think about this. Let's think about this, though. I'm hearing 40%, 30%. It's 30 to 40%. 30 said 58%.
30 is
Chris Tucker just said that CNBC did a story on this, and it's 58%. Okay, so here's my thought process here. There is margins to be squeezed here. Squeezed. If they're charging 50%, there's going to be other little startup companies that are going to do it for 40.
There already are
startup companies that are going to do it for 30. And there's going to be other companies that are going to do it for 20. So if you think they're going to sit there with happy 50% margins, you are wrong. I absolutely hate this story because, well, I don't hate the story. I hate the valuation. It's trading at a ridiculous valuation. Is it the best in breed? Right now it is, but competition's coming. Those margins are going to get squeezed. And this company is not going to make nearly the amount of money. They don't make any money, but if they're ever thinking they're going to eventually make money, they're not going to be making 50% on every sale. They're going to be making 40% on every sale going forward. It's not going to happen. You're going to look at this in 2 years, and there's going to be companies doing it for 10%. So that makes me think Dash is a huge bubble. I would not be buying a Dash pullback. Can it go up? Can it go back to 200? Can it go to 220? Sure. I think when the dust settles, when we look at this 5 years from now, I think the stock is under $50.
Write
that down. I think it's under $50 when I look at it.
I'm not gonna disagree with you on that one. I mean, Holy mackerel. But anyways, it's near monthly support if you feel like, taking a dip. I mean, the 2 months of the IPO under 140, it's currently 147.54. I mean, I see some people, my kid was quarantined in school. Okay. Yeah, I mean, certain special purposes like that, or if you don't have a driver's license or you're handicapped or something, yeah. But man, that is just, I don't know. That is, I can't even say a dash for trash in this one. But I just wanted to bring it up because I was looking at the Airbnb.
I don't get it. I don't get
it either. I can't believe the IPO.
I've never got it.
S&P's crawling back here,
back.
trying to get back. Yeah, mid-range on the session is 31 and a quarter. We're almost there. If Couple D gives a
should have been buying my stocks in the pre-market, the ones in my long-term portfolio.
Yep.
So my list, if you want to just know the stocks, and I don't have any of these yet, so I hope they don't just buy them up on me. But Marvel, I'm looking at MRVL is on my list.
Sure.
I looked at Ballard Power. BLDP, because I'm Canadian. This 20 level is a big level, and look at Friday's low, 20 and a quarter. Not that this is a cheap stock at all, but I don't think the story's over here yet. That Ballard Power is Plug Power. Similar Plug Power, Fuel Cell, Ballard Power kind of all go together. Plug's been hit hard too. PLUG. I don't think the stories are completely over here yet. Fuel Cell has come down significantly, but it was 2 for so long, and now it's 12. I still feel like I kind of like the Ballard Power 20, looking at the 20 level. I feel like it was a washout low. Went from 30 to 20 in 4 days.
Hey, Joel, can you do me a quick favor and just stop sharing your charts and then share them again? Because
I'm having trouble with Joel's charts.
I'm having trouble with Joel's charts right now. It's not Joel. I don't think it's Joel's fault. I think it's the StreamYard's fault. But
it could be.
No, it's I don't. For once, I don't think it's you. Okay.
We like to blame Joel for everything.
No, I don't.
You guys
I was just giving my list before you go on the tangent here. If you guys will have other ones too, I like Mitch's here. HEAR. I liked it at 20 though. It didn't quite. It's still a ways off of that 22. So I had a level of 20 for a Turtle Beach HEAR. I do like Corsair Gaming. This is one that I held, CRSR, and I shouldn't have. I held a couple growth names. I like the CRSR story. I should not have held this. I should have sold it, but I held on to it. But I like Corsair Gaming too. I'm already in it though, and I'm down. So you can trade my heat if you want. 31.21 is where it's bid here this morning. But I kind of like that one too. So these are just longer term. These aren't trades. These are like stuff that I'm looking to either put in my long-term investment portfolio or already have in there. Couple stocks, and then TAN, like I was saying, I want to add some more solar back in, so I might just go to TAN, down the dirt and hope I don't get tanned.
That's a big sell off. We talked about this when we talked about the $80 level. So
that's a huge level. So you get anywhere near 82. Like if you get a significant pullback here, I don't know if you're going to get it this morning. I think you might almost have to be striking at the 84, 85. I don't know if you're going to get down to the 81, 82, but maybe you do. I mean, we're not out of the woods. We're not out of the woods. Not going all in, not getting on margin, just redeploying some of the cash I raised a week and a half ago. That's all.
All right, back at the halfway point on the session, right there. Nice rally, 38.31. We just ticked. We do have a deal. Apollo, man, they're on a buying spree, huh?
What'd they buy?
They bought what? ATH?
ATH is the ticker. Athene.
ATH.
Yeah.
Is this cash?
It's an all-stock merger. So the ratio is Athene shareholders will get 1.149 shares of Apollo for every share.
I love all stock mergers.
Yeah. So it's
what's Apollo symbol?
APO.
The reason you often see them get hit, the acquirers, but remember Apollo, this is what they do.
Yeah.
I mean, they buy stuff. So it's not like out of the realm, they paid a big premium, but this is what Apollo does. What do you think of Apollo? I mean, 5.7% dividend on Apollo, too. Like, that's a nice divvy. This is a stock that doesn't do a heck of a lot, but, they're smart, man, over there. I have their SPAC, which hasn't really done anything besides actually start to go down the last 3 weeks with every other SPAC, but I don't know. I don't mind. I'm not paying up $1 here.
Yeah, I'm not sure.
But if it pulls back in, if whatever they decide, they're going to hammer it on this. If they decide to start knocking it down, Get down there 45, 46 on APO. I kind of like it.
Yeah.
Divvy play.
They jacked this thing to 54, and I'm thinking, wow, they're trading up on the deal. But
That's just stupid.
that was just a high tick around the 4:30 time, and now not even 4:30. It was after that. So that's big coming in as well. That was actually that was just like at 7:00. That's between 6:30 and 7. Hit 54. I do see that $48 area. Did get down there on Friday. Did get down there last week, and then. Also, that was your February low at right just under 48. I believe that was 47.67. So there's your level in APO.
What about GameStop here? There was a headline. This is from Bloomberg this morning. This is just a report from Bloomberg. Nothing confirmed yet. Just a reporter from Bloomberg saying that Ryan Cohen is going to, I guess, take a more active role in leading the company's transition to an e-commerce business. That was always the implication, right? That Ryan Cohen was going to come in there and lead them to the e-commerce glory, and that's what the headline is saying this morning. Like he's just going to help them with that, and they're gonna name a new CTO, I guess imminently. I don't know when. But
it stopped going down.
Oh, and we've been talking about it.
Yeah,
Joel,
it just stopped going down.
It won't go down. When the stocks won't go down, they want to go up. Like I actually bought this thing a couple of times. I just can't stomach it. I bought at 117. I was like, I'm going to hold on to it for a bit. And I bought at 125, and I shake out. It's such a wicked little stock because you're buying it and you're thinking, I'm really buying something at a ridiculous valuation, and I can't stomach it. But the technicals are just telling me that this stock continues to want to go higher. I think you're eventually going to challenge that 184, which is nuts. It's nuts. It doesn't make any sense, but you got to just separate yourself, in this technicals, like separate yourself from the fundamental thoughts of this company because it is completely disconnected from fundamentals. It does not care. It will one day, but I don't know when that day is, the day of reckoning comes for that. But right now, this looks like it wants to test the 184. I'm not chasing it. I'm not trading it. I'm just saying I'm not shorting this thing and buying puts either because this thing just doesn't want to go down.
I mean, we talked about this. I think Kenny was on the afternoon show on Thursday, and I'm just like, someone asked about it, and I'm like, well, you got a string of higher lows, 86, then you went 99, 97, 112.20, 113.12, 115.30, and then Friday it was 127.54. So also, I mean, you did have one lower close in that area, but when you have higher lows, I mean, that just tells you someone wants to own the stock, and they're stepping up their bids. So, and also, I mean, that you mentioned that 184.68 that got a little silly. I think on the day there was something. Ryan, didn't he say something about the company should sell like a bunch of stock at 200 and then take the money and put into Bitcoin? Was that something? Did I dream that up, Spencer?
That was a Kramer tweet. That was like a hypothetical thing. That was nothing. That's
okay.
I think that was just Kramer trolling.
Just throwing stuff out. Okay.
Yeah, I don't know.
But anyways, it pre-market high. I'll just give that to you right now. I don't know how the pre-market levels work in this thing, but 158, and on the dailies, really the only thing you have. Where did we settle that day? Oh, that day we hit 184.68. We settled way down at 108.73. But this is not but the next highest close that you have in this is from February 1st at 225. I don't think we're going to see that, but
it could do anything though.
It can, that's for sure.
I think you just somebody else says you have to have diamond hands to trade this, and I believe it. That's why I'm struggling with it because I don't have diamond hands. I definitely don't have diamond hands. Not diamond hands here. They're just hands.
Dennis has paper mache hands. His hands aren't even paper.
I don't hold
It's not even paper. It's
I
paper mache.
don't hold well at all.
No, you don't.
All right, only down 7. Triple D. Keep the bullish rants going here. We may see unchanged here. So wow, a lot of volatility here in the pre-market, and
I might have to
same for the day. Yeah.
I might have to cancel some orders here. I mean, I wish I was buying the dip when I was talking about buying the dip half an hour ago, but I'm doing a radio show.
Chat. All right.
Should we talk about McAfee real fast? MCFE. They just
Third
announced.
headline here?
They announced this morning they're going to issue a special divvy, a $4.50 special dividend, and they're going to reduce their debt by about $1 billion upon the close of the transaction of its enterprise business. So they're selling their enterprise business and
using the cash, giving it right back to shareholders.
Basically, yep.
Yeah.
Now look at this. You say a $4 dividend?
That's what I said.
We're leaving some money on the table here.
Yeah, but here's the issue, and this is the stupid bull market that we have been seeing stocks pay a $10 special dividend, they rally the stock $10. That is absolutely the stupidest thing. They think, oh, it's free $10. It's not. That's coming from the company. It's just a reallocation of resources. It's really no more money. So paying up $10 for $10 special dividend is the dumbest thing ever. But they've been doing it. And, you look at here and you say, oh, it's only up 3, and, it's a $4 dividend. Why is it not up to 4? Because that's what they've been doing. I'll tell you, eventually that, doesn't happen in normal markets. It's just been this relentless bull market. I'm going to have to cancel all my orders here.
Look at this. Look at this rally here.
I gave it to you half
this
an
is
hour
one of your
ago.
best. I know. I
didn't even participate hardly. I was hoping at the open so I could buy some stocks in my longer term account. I'm day trading. I'm still day trading here, but man, I'm disappointed here. I wanted to hold on a little bit.
There'll be some. Believe me, there'll be some shaking and baking today. You get. I don't know if we'll get back down to those pre-market lows, but holy mackerel! Did we get any news?
Comeback.
Is there anything new to news me, Spencer? Is there anything, or just a good old fashioned buy the dip here?
Nothing that wasn't over the weekend. I mean,
okay,
we're all getting more stimmy checks.
Oh yeah, that's right.
And
let's. Do we want to do? Do we want to do Cathie Wood? I mean,
we always want to do Cathie.
I don't even remember what Cathie would do. That's what we're calling this now. We're calling what Cathie would do,
or what she did.
Let's see. I have to go all the way back to Friday. I don't remember.
I have the list.
Okay, well, here
all the same stocks pretty much. There was a couple new ones on there. I hadn't seen SEER in a while. Joel, you got to see this one. Bring up Friday night. They were buying, and there was actually some size going off up there. So here's where traders are absolutely doing it wrong. SEER been hammered. $81, all the way down. On Friday looks like capitulation. They knocked it down to 40. Cathie bought the stock on Friday. Comes out on ARC. They bought this thing up to 51. They bought it up over 20% because Cathie bought some shares. Somebody was paying up 20% for that.
Jesus, Murphy.
Yeah. So I tweeted out, I was like, because I'm like looking at that. I'm looking at people paying up at 51. I was like, these people are going to lose money. So I tweeted it out and said, if you're paying up 20% for a stock that got hammered by Cathie, but that got hammered earlier today, and just because Cathie Wood bought it, you were absolutely doing it wrong. Some smart people may have been buying some of these stocks on the close, knowing that maybe Cathie comes into this one, but this was a relatively new pick. So they're like, oh, automatically, Cathie Wood picks go up 20%. Not in this market. Not in this market. Anyways, it's doing okay still for you. It's up 9%, but the people who are buying at 51, it traded some size up there. Not huge size, but it was trading.
I saw it. A couple thousand shares. You would have had
a few thousand shares were trading up there. So now it's offered 47. Last tick was 45.50. So you're immediately down $6. And you're still up 9% here. It's still having a good morning, but it was just such a ridiculous pay. So I can't understand, the mentality to just come in and, the Cathie trade's back on, let's pay up 20% for a buy. You've got to understand your market environment. The market environment that we're in is not as hungry as the market environment we were in 3 weeks ago. 3 weeks ago, paying up 20%. I never pay up 20% for Cathie Wood stock. 3 weeks ago, though, it might have actually been okay. Not in this environment. So could it go up back to there? It might, but you're already down. You could have, obviously bought a lot cheaper if you would have just waited till this morning.
We got Tim in the background?
Oh, we do. It's 8:35. I lost track of time. Sorry. Okay, let's bring Tim on. I apologize. I was in my own little world there for a second. All right. Tim Quast is the founder of ModernIR and Market Structure Edge. Joins us every week for Market Structure Monday. Let's do some Market Structure Monday, guys. Let's do it. Tim Quast, good morning. How are we doing, sir?
Guys, great to see you. Greetings from Steamboat Springs.
How the market treat you last week? It ended up being a good week overall, somehow, some way. How you doing out there?
Well, here's what I think, and it's going to require some sacrifice for one of us. Ever since I went to the Caribbean, Karen and I went to the Caribbean end of January, and of course, the market soared after dropping. And the snow showed up in Steamboat, and ever since we came back, the market has been miserable, and it stopped snowing. So I believe we're going to have to draw straws, exactly, and see who's got to go to the Caribbean so we can get this market corrected.
That sounds like a pretty bad punishment to have to go to the Caribbean here. Right. You're like hoping for the short straw on this one, aren't you, Tim?
And to answer your question, Spencer, you can see I've got some pretty good sun. And I was hanging out on the slopes and by and large staying away from the market, because remember, we talked about this back on February 22nd. I said, if you look at the market for about 10 days, market structure will tell us it's not going to be a good place to be. Now we're getting very close to the end of that, the turning point. And so often for retail traders, we unfortunately tend to be late, right? We about the time things are improving is about the time that we leave. And I'm hoping that these Monday discussions that we have will help folks come to understand the cycles that occur in the marketplace. And I caught a little bit of your Kathy Wood discussion, and I think there's something important to understand about exchange traded funds. You know, she's run this very successful family of ETFs.
I'm glad you brought this up, because I was going to ask you about it anyway, but keep going.
Okay. So there's an important concept to understand about ETFs, and they have an advantage that we don't. And they're going to do things periodically that most of us can't. So one of those key things is that they can wash out capital gains. So you can use what's called the redemption basket. You were talking about SEER, Dennis, and this you could apply to Tesla, Apple, Facebook, Google, all of these things that have had extraordinary performance. So if you want to redeem ETF shares, and realize she had some outflows, a couple of $1 billion of outflows. So what she will do is put in this basket. It's like a shopping list. And so into this basket will go names of stocks. And she will push those out through the market through what are called authorized participants. And those will be traded for shares of ARKK and maybe other members of the family. And when that happens, she is able to reduce the tax consequences for the ETF. Then when she brings them back, they will be brought back at a stepped up basis, and she won't have to pay taxes on those. You and I will still have to pay taxes on the performance of the ETF shares. But I think a lot of that is going on. I think it's occurring across the market, because keep in mind, tech, consumer discretionary, and communication services combined are over 50% of market cap. And consumer discretionary and communication services are not, there's a lot of tech in there. Consumer discretionary includes Amazon and Tesla. Communication services has Facebook and Google. And so if these parts of the market go down, I don't care how well, GameStop does, or GE, or the 2.5% of the market that is comprised of energy stocks, that cannot possibly carry the market to new highs. It requires those major engines of the marketplace. And when this process of washing out capital gains has run its course, then those stocks will come back. There's a qualifier, but that event is coming. We have quad witching coming up, not this week, but next week. And I expect this process is going to be done by then. That's my expectation.
Tim, what do you make of the rising hullabaloo of the ARK Invest liquidity risk right now, and the idea that they're getting so big in a number of less liquid stocks that should they receive a waterfall of outflows, then that would open them up to some serious problems and potentially having to trade at massive premiums to NAV.
Could happen.
Okay.
The advantage, though, again, here's point number 2 with ETFs. And I had this conversation, by the way, with the BlackRock ETF team about 3 years ago, after we had done about 3 years of research trying to understand how these instruments work, because it's actually very complicated. They seem like mutual funds that trade like stocks. There is no such thing. A mutual fund regulated as an Investment Company Act of 1940 fund has to give everybody the same price. Therefore, there can only be one price per day. So how could an ETF offer prices throughout the market? Well, by offering a substitute. ETF shares trade as a substitute for the assets of the fund. That's the only way it works. So an ETF will create a basket and say, here's the stuff we will require or will accept in order to create more ETF shares, and vice versa. Well, they could substitute. So what Cathie Wood could do is say, okay, I'm looking for the FANGs, but I'll also take cash in lieu. And the BlackRock team, I said to the BlackRock team, so you would take cash in lieu of equities? And they said yes, and we'd over collateralize it. So 105% probably. I said, could Morgan Stanley write you a check for the basket? And they said, we take good collateral. So to answer your question, yes, but as that fund grows, I expect that they will use more cash in lieu and less stock to try to control that risk. It's entirely within the legal limitations that these funds are allowed to do, and it won't show up as cash on the book. It will show up as whatever the equity is that is in lieu of. So it will be Tesla or Facebook, but it'll be a bunch of cash. Well, that works so long as the market doesn't move too dramatically. Cash has very sustainable value, but a big move could be trouble. Sure, this could happen to the whole market when you think about the $5 trillion tied to ETFs.
It's just I just want to hop in, Tim. Is this process been done before by somebody else, and how did it end up?
Oh, sure. Yeah. In fact, there was a fund 2 weeks ago. The name of it escapes me, but they had to close it to redemptions because of some dramatic moves in the parts of the market that it's exposed to. Sure, it can happen. These ETFs, remember, are dependent for prices on volatility. There is the volatility of the basket of stocks and the ETF shares. And in order for market makers to participate, to say, we will take the risk of buying and selling these things, there needs to be predictable volatility. When it becomes unpredictable, and I think this is also a problem in the market that's beginning to manifest. When it becomes unpredictable, then a big market maker like Morgan Stanley or Jane Street or Citadel is going to run a calculation and say, we're not taking a risk on that. And they stop making a market in it. Well, one party removes itself from the equation, and you can get destabilization. And it is something I'm concerned about, and I'll show you when we come around to a little bit of data.
I mean, this is what we saw during the flash crash. This is what we saw during the two flash crashes, really. There's the May 6th one of 2010, and the 2016 one, which doesn't get as much highlights, but is definitely same animal cut from the same cloth. That we've got all of our liquidity being provided by a select amount of market participants with no affirmative obligations. And if the going gets tough, they pull their bids, and we're left with nothing.
Exactly.
I mean, this is the market that we have, though. So 99% of the time, it operates very well. 99.9% of the time. And then you get these little, instances where risk gets elevated to a certain level. The market maker gets too heavy, and they're like, okay, we're out.
Exactly. And look, you can't blame them. And I'm not, fostering fear here. I don't worry about that because we understand market structure. And I think it's important if you're going to be a trader in this market, you need to understand it too. But you don't have to be afraid of it. You just have to realize that it has limitations, and they're going to manifest as volatility increases. And so we hit a 52-week low in volatility February 12th. I mentioned this last time we were on. That's the same day, by the way, the Chinese stocks topped for the year, same day FANGs topped, same day that the general tech sector topped. And ever since then, things have begun to deteriorate and volatility increases. And so what you have to know as a trader is there are like 8 parties that are responsible for almost 90% of customer orders.
That's crazy.
So you have to realize that that can become a bottleneck. And what you want to protect yourself from is, well, where will the bottlenecks show up? Well, they'll show up where all the market cap is. Though if 50% of market cap is tech, communication services, and consumer discretionary, they're going to struggle if there are redemptions, and you need to know that. So when you look at your, how sentiment is moving in the market, when those things top, reduce your exposure to them because they could become, they could crumble if things really start accelerating.
Let's take a look,
Okay.
Let's go look at, and get your thoughts first on the overall market. We've had a significant week of volatility here. Obviously, we look like we had a washout low on Friday in the Qs. Can you give us, just your market structure look, maybe on the Qs here, because they really got hammered. They had a nice snapback rally. What's your market structure? What's your system saying?
Well, let's pick a couple of examples just to illustrate where things are. So let's take GameStop. Always fun to talk about. And remember, I said that it looked pretty appealing. I made money trading GameStop in the last couple of weeks because market structure was very appealing. But now I look at it and say, it's a 10 out of 10. 10 is the ceiling, 1 is the floor. And it's simply a measure of supply and demand. When you're bouncing against the ceiling, that's good demand, but it also means people are going to begin to struggle to fill their orders. And you need to be aware of that. Plus, it's 57% short. It's topped. And active money is in here. Active money is often the sucker, right? So I would look at GameStop and say, if you've been trading this thing, no matter there's some interesting rumors this morning about the role of one of the board members there to try to improve the outlook for GameStop. But I would look at this from a market structure standpoint and say, well, it's bouncing off the ceiling and short volumes above the trend. I'm out. Now, conversely, look at Moderna. Moderna is the exact opposite. And these are just a couple of touch points of the market. By the way, if you want to follow along and do the same thing, traders, go to marketstructureedge.com. You can set up a portfolio for free, no credit card, and you can see what I'm talking about here and how simple it is to just look at market structure. When Moderna is at a 10 out of 10 and short volume is below trend, stay. The moment those things begin to deteriorate, sentiment begins to fall, short volume pops above trend, get out. It's not that complicated. And now it's bottom. Now I'm watching this. I'd like to see short volume back right in line with trend, but this tells me the next opportunity is going to be in the Modernas. That's the way the cycles run. They're very short term, and they're for the same reasons we just discussed. ETFs and indexes will get overweight and they'll underweight themselves. Options will expire. Will hit the month end, and people have to true up their futures contracts. And those things create cycles that will manifest in sentiment like this. So looking at tech, Dennis, if we talked about Palantir, I'm looking at tech, and tech is starting to get very attractive. I mean, it's not, it hasn't ticked up. It's way oversold, right? And I think money is going to have to come back into it. There is one concern that I have broadly, and that's here. If we look at the broad market sentiment, S&P 500, we use SPY as the proxy for that. Here's the issue. This is measuring the overall waxing and waning of supply and demand in the S&P 500. So, when we drop down to the green line here, that's a sign that we'll probably get a surge. Here's the peak, right about that. It was the 18th for the S&PY. It was about the 12th for overall tech. Now we've been at the same level for 4 days running. My question is that a bottom or is it a top? If it's a top, a very weak top, I'm very concerned about the fact the market could correct. That condition has preceded every market correction over about the last 10 years. I'm not saying it's going to happen, but it's the one threat. And I think it would sort itself out fairly quickly heading into quad witching next week. But that concerns me. I'm definitely not coming back into tech until I see that improve. but Moderna could be very attractive.
What about ExxonMobil? Because this has been a real run. This is where people have been hiding from the tech wreck. They have jumped into energy, hand over fist. The stock, ExxonMobil, which everyone hated back in November, was $33, has almost doubled to $61 here. What's your market structure show on ExxonMobil?
10 out of 10 top, 55% short. That tells me that the wild card, and people don't talk about it enough. Look at that. I mean, it's been at the sea. This is what Tesla used to look like. You go back to, May of last year, and Tesla was slamming into the ceiling like this.
Yeah.
And so, but look at short volume. So if we're looking at a 3-month period, a very good stretch of time to look at, it's at a 10. But short volume is massive. And so what this will tell us is that high frequency traders, the Citadels of the world, know that money is overweight Exxon. It's overweight energy. It doesn't mean energy is going to fall apart. Energy will be driven by the dollar. As long as the dollar is weak, I don't care what happens at a Saudi refinery. I don't care what else happens. If the dollar strengthens, energy will decline. If it remains weak, the oil prices are going to remain strong. That still does not mean that all these funds are not going to reweight. And I think they're going to reweight right into quad witching. And that's not this week, but next week, because look at the short volume. It's telling us that high-speed traders think supply is going to come into the market. And they want to be on that side of the coin. And that's what it's telling us.
So you'd be taking profits in stocks like that right now?
Absolutely. Yep. That's just a very simple mathematical conclusion. Yep. No emotion at all. Just look at the short volume and the sentiment. Get out. Yeah.
All right. Tim Quast is the founder and CEO of ModernIR and Market Structure Edge. Joins us every Monday for Market Structure Mondays. Tim, we always appreciate it. Thanks a lot, sir.
Good to see you guys. Have a good week.
All right, 8:52. Joel, what's up?
Quad witching. Someone's asking about that, and we talk about it. Only happens 4 times a year. We like to call it the triple witch. March, June, September, and December. That's when you have options on stock index futures. Options on stock index futures and single stock futures. I don't know if anybody's still trading them, but they all expire the same time. And a lot of times it creates, turning points in the markets, excess volatility. The contracts roll over this week for the futures. So that's why you're seeing this choppy trading. But a week from Friday, the 3rd Friday of the month, that's where going to be, that's what's going to be the fireworks. So something that we look forward to.
All right, 8:53 here. Let's do some tickers from the chat.
Sure.
I'm seeing a few people ask, talk about these NFTs, these non-fungible tokens. I want to recommend a interview we did last week. I'll put it in chat right now. This is for all you people who are seeing the headlines this morning or over the weekend about Jack Dorsey putting up his first tweet for sale and fetching a bait of millions of dollars. And
does Jack Dorsey get that money?
First tweet? My first question was, why does he need it? But yeah, that money's going to him.
He's good though. But you know what Jack Dorsey gives? He's very much into philanthropy.
It's neither here nor there. I want to put this this link in to. I just put it in chat right there. Like an hour-long interview with these guys who are in the non-fungible token space. They host a podcast. They talk all about NBA Top Shots, what that is, how tokenization works. So I want to put that out there. It's basically a new asset class, and
it's insane.
It's pretty wild stuff, guys. It's pretty wild stuff.
I mean, I thought Bitcoin was insane off the hop too, and it seems to insanity can reign for a long time. But I can't understand why, 1, you would want to own Jack Dorsey's first tweet. 2, why we would pay millions of dollars for it, for something we can simply all read. We can go get it, but you are the official owner of his first tweet. I mean, Joel, I can't even imagine what's going through your head on this kind of stuff. Like, I saw some picture of some digital over the weekend, and maybe this was going viral. I'm not sure, but it showed up, and my buddy sent it to me. And it sold for $1.3 million. It was digital artwork.
It was a Banksy. And this was always when people were asked, "Oh, what are the use cases of this technology? What are the use cases of blockchain?" This was it. Like this was one of the first things that people said.
So everybody knows who owns this. They officially own it. There's no way to steal it.
Right, and ownership of.
Is there a way to steal an NFT? Is there a way to steal it somehow? Like how do you okay, I buy Jack Dorsey's tweet for $2 million, and now I officially own Jack Dorsey's first tweet, even though I don't know what you do with it. Is there a way somebody could potentially steal that on you?
No, but there is a way for you to lose it.
How would you lose it?
Well, if you lose your password and stuff, then because it's on the blockchain. So if you lose your password to your digital wallet, you can.
This is the market that Pump and Powell has created, Joel. There's just so much money going around, like in certain pockets, and they don't know what to do with it. And now they've created a whole new asset group to try to find the money. And I'm going to invest in Jack Dorsey's first tweet.
Hey,
this is borderline insanity.
It's an asset.
It's not an asset. It's nothing.
A market is what people are willing to pay. You know what I mean? People are willing to pay. What I want to know is, when are we going to tokenize PreMarket Prep and start and allow people to buy our shows?
You can buy our first show. I'll tell you, Joel, it was terrible.
I don't even know.
I don't even know if we can find that.
I don't know either.
It was on the first show on SoundCloud, and they had there's probably 10 people listening to us back then. And it was absolutely. We didn't even have visual. We didn't have no pictures or nothing. All we had was just our voices talking technicals. It was just awful.
Okay,
do you know what the
NFT it?
Do you know what the tweet was?
Yeah, it's setting up my Twitter.
Yeah,
that's what it is. Just setting up my Twitter.
Yeah,
with no vowels.
Did he do it? Yeah. What if he deletes it? What if he deletes it?
Yeah, what if that happened? You paid $2 million for it, and then he deleted it. Can you sue him for the $2 million? I don't know. I think we should be able to sue him for it. I mean, it's gone now. All of a sudden, I'm sorry, I accidentally deleted my tweet. I don't own it. My $2 million. So that's how you would lose it. Jack Dorsey's totally controlling it. You can just go delete, and it's gone forever and ever and ever.
Hey, so many questions.
Sorry about that. You're out $2 million.
So many questions, so few answers.
Because it's all nonsense. This is just nonsense. But whatever.
Hey,
you want to throw and buy $2 million tweet?
There's going to be inflation. You got to find something else besides your tech.
That's what the problem is. Inflation is driving all this very ridiculous decision making by everyone. Pump and Powell. Thank you.
Pump and Powell. S&Ps do go green on the session. Up $1.
8 o'clock when I came on and said buy the dip. Shut about the dip.
30, not 38, 40, 75. We're up $1.75. What a spirited rap. Buy the dippers are relentless here. Wow. This is some good volatility.
All right. I said we'll do some ticker time, and then we got distracted, so let's do a couple tickers before we wrap it up here.
Sure.
Let me scroll up, though, to find a few, because it's been a few minutes.
Find some good ones.
Fire. We should do. I know we mentioned FireEye, but you want to pull up the chart? Because the CEO,
yeah, we did.
The CEO was on Kramer, I think, on Thursday or Friday.
It's at 18 level, but it's up now, so it's
you're not going to get it at 18.
No, it's going the wrong way. So I'm out. There's no trade here for me. 18.
If it came down to the close, you had 19. I mean, if you're trying to pick it up on the cheap, 19, but sure doesn't feel like that. Trading. Oh, that was yesterday, or the high too from yesterday. So maybe 19 and a quarter. Throw something out there. I mean, if they do the gap fill at 19, then you're done. But that's a tough one. That is a tough one.
They don't want to talk XL fleet. Apparently, they put out. I don't know the headline here. Did they put out I know the short report that came out last week. Did the company say something in response to that this morning? People are talking about it. The stock is up slightly.
Yep.
Not much.
They responded. Oh, man, I got to pop this out. Hold on a second. Okay. So, yeah, they responded this morning. Let me see if I can skim real fast. By the way, they report earnings on the 30th. But
what a hammering this stock. Look at the SPACs. This is just, obviously this was a SPAC before $10 to 30 and all the way back to 10. Now you got to think 10. But then again, this is X deal. So we've seen a lot of SPACs like Clover Health and a lot of other ones breach the 10 support post-deal, and they don't find the support there the second time around. I don't know much about the fundamentals of XL Fleet at all. So, I would say if I was looking at this thing, though, you got to think 10 is going to provide some, support here now, but hard to be a buyer of this chart. It's just awful.
Yeah, a lot of times when they come out with the short reports, they whack it, and then it just doesn't
bounce on the response better than they leak back. I mean, these are high spec plays. Like XL, don't think this is just, a value. This is a high speculative. All those SPACs, these are newer companies. A lot of these don't even have revenue. These are all very speculative plays. Some of these companies are not going to make it. I'm not saying XL is going to be one of those, but you just have to be aware. I know everybody thinks, oh, it's back to 10, and I'm going to be safe at 10. And yes, we did cut through 10 and we bounced there, so that's why I'm saying that's a level here now. But it's not a line in the sand. After they're through the deal, pre-deal, you can get your money back if they don't get a deal. But there's so many SPACs out there, they're getting bad deals now is the problem. They're getting bad valuations, and they're buying companies that maybe they wouldn't be buying if it wasn't so competitive out there. So you were seeing, you were seeing deal announcements, stocks go down on deal announcement. You weren't seeing that a month ago. So it makes it tough to just be a buyer at 10. They get a bad deal, my stock could go down to 9 or 8 or more. So, I mean, I've lightened up my SPAC portfolio. I had a pile of them before. I've sold a few into the deals. Like, I said that I sold this SVAC. I'd sold the majority of it into that, the deal pop, because they just weren't responding well to a lot of these. And the company they were buying, I actually didn't mind the Starboard one. I think I might have held a small piece, but it's tough. The deal announcement, they're just not getting that love. Even the good ones, like you're seeing some pretty good deals here in the last couple of days, and they're not getting any love, really much love at all. So it has been the play to sell into the deal announcement. SNPR, classic example there. Tortoise acquisition. I had a pile of that one. And I did sell some into the deal announcement. I wish I would have sold it all. I mean, obviously the stock was trading significantly higher. Different market for SPACs a month ago. Went from 13 to 18.5. You think, oh yeah, it's a pretty good company that they were acquiring. And, it's just leaked it all right back down and got back.
I was skeptical of those. I didn't play any of those. I mean, I know you guys did well on it and played it, but I just, to me, I mean, you just had to get rid of it, and that had been the mantra. I don't know if there are more companies. It just got to be too many of them. And you know who also was pretty cautious on this? Remember we had Craig Johnson on a couple weeks ago, a month ago, and he said, hey, this is not a new phenomenon. This is what happened last time. And he brought up that chart, and it just showed, the historical performance. But, yeah, there's still some winners.
But yeah, we can't, though. But Craig went back years, and you're looking at historical performances, of SPACs, and they've never got any attention at all before. So you're
not like this,
we never had any attention. So I don't think you can extrapolate back. I love Craig. I don't know if I completely agree with that analysis, because you can't extrapolate back to like 5 years ago on SPACs and looking at them, because nobody talked about them. There wasn't even I would see a SPAC, I would never trade it because they didn't move. They just sat there 10, the odd, one, in 100 get a deal or whatever. Maybe it was more than that, but it never seemed like there was any excitement. So it's different now. Because these are on the radar, and it's a different way for companies to go public. And I do believe there's going to be some good companies that go public this way. There's just so many SPACs that they're getting, it's just they're getting bad deals because there's too many of them. It's too competitive.
Speaking of, did you see Tomas' tweets over the weekend? He was getting flamed pretty hard. How do you guys calculate your performance relative to like a benchmark? Because here's how Chamath does it. I'm just going to read you his tweet. Okay. I looked at my relative performance versus the S&P 500. 3.6% versus 2.3% equals 56% above the benchmark.
And then but you got to think of something else, which isn't very impressive. Sorry, Chamath, but he's getting the benefit. He's getting the pops. He's like doing something. He's getting that premium, whole benefit to it all. So if you're not killing the market, and you're gonna imagine, like I said, when Warren Buffett buys a stock, he's automatically up 5% because when the day it gets announced that he bought it, it's going to go up. So there's a cushion, there's a push up because he's the one involved. His name, Chamath's got the big name too. He's doing these. All of his SPACs were trading at a premium even before pre-deal, just because it was Chamath's deal, and he had done the big deal off the hop. So he's known as like the SPAC guy. Obviously he wants to do the whole letters of the alphabet, all 26 of them or whatever. So I don't know. It's he can talk, and say, oh yeah, I'm still beating the benchmarks here, but he talks a little bit too much, maybe.
It's just that is some world class spin right there.
Yeah.
I am beating the benchmark by 56% because I'm up 3% and they're up 2%.
Yeah. Well, yeah, like market's up 1%, I'm up 2%. I'm 50% better than the market, or 100% better than the market.
100%.
I'd be 100% better than the market at that point in time. That is some spinning.
They're attributing some of this rally here to David Tepper's on CNBC, and he's giving
I thought it was me. I was bullish an hour ago.
it was you
I moved the
30
whole
handles
market.
ago, Dennis.
I moved the whole market. I was bullish an hour ago when we started the show.
Yeah, no, David's.
I want the credit for that.
All right.
Dennis Dick gets bullish the markets at 8 a.m. on pre-markets prep, and we rallied 25 handles since then. That should be the headline. Benzinga.
All right, I saw a couple of super chats. One about Tesla, one about stocks that go up during a downturn. We didn't get to them, but I've written them down. We will cover them. If not at the afternoon show, then definitely tomorrow morning. So I apologize for those super chats. We didn't get to those yet, but it is 9:06. We've got to run.
Sure.
Everyone hit that like button on YouTube. I don't know. Last I checked, we were at like 100 likes, which is not gonna get me dinner. How many likes are we at right now?
I see 390.
390. Okay, so we've gone up since then. I said last I checked. It was like a while ago. Let's get those likes up. Everyone, thank you very much to our guest, Tim Quast. Once again, today's show is sponsored by Market Structure Edge. To learn more, go to marketstructureedge.com. The link is right there on the screen. Dennis just said goodbye, which means he's out. Once again, I want to say, I said this at the top of the show, it is a big week for investor days and analyst days. Let me just give you a list here. I read this off Friday afternoon, but if you weren't watching, I'll do it again now. We got like 15 or 20 investor and analyst days this week, starting today with Cigna and Perion Network, PERI. So what this means is there's probably going to be a lot of headlines out intraday about these companies. They're going to give some numbers, and that'll get out there. So CI and PERI have analyst or investor days today. Tomorrow, DraftKings has its first investor day. Fortinet, Chevron, and Sonos. Okay. Wednesday, CyberArk, Rapid7, which is RPD, and Verizon have investor days. Thursday, Residia, which is REZI, Lithium Motors, which is LAD, Zyopharm Oncology, which is ZIOP, and T-Mobile have investor days. And Friday, Lumentum, which is LITE, and AT&T have investor days. So actually, Verizon, T-Mobile, and AT&T all have investor days this week. So that'll be a space to watch. And then DraftKings tomorrow, Cigna today. So it's going to be a big week on the investor day front. Watch out for intraday headlines from those companies, guys, because they very well could happen. We've seen it happen time and time again. So just be mindful of that. Not a huge week on the earnings front, but a big week for the investor and analyst day front. Okay. So again, hit that like button. All the information on today's show is meant to be used as informational purposes, not for investing or trading advice. You can also catch this show via a podcast. Every show is available on all the major podcast platforms: iTunes, SoundCloud, Spotify, Stitcher, TuneIn, and I'm pretty sure that's it. Everyone, that's a wrap. Have a good rest of your day. We've got a full day of programming up next. Get technical with Neil Hamilton. I don't actually know. I think he's supposed to go live soon. His show will start at 9:30, but I know he likes to hang out and just kind of shoot the shit before he goes on at 9:30. So he may be going on in a couple minutes here, but that's going to be a wrap for our show here today. We've, of course, got the Power Hour at noon, SPACs Attack that's going to be a good one, actually, because we've got Sylvia Jablonski on SPAC Attack today. She's with Defiance ETFs. They've got one of the SPAC ETFs, and they're going to ask her all about what goes into that and the future of SPACs. So that'll be at 11:15 Eastern time today. I've got my ETF show today at 3 o'clock. I'm talking to a manager of an actively managed tech ETF. That is not Cathie Wood, but a competitor to Cathie Wood. That'll be at 3:10, 3:15 today Eastern time. We got a full day of programming all day, as I mentioned, basically 8 a.m. to 5 p.m. And again, just to recap for those who weren't here last week, we are doing a combo continuous stream and separate streams. You can get one continuous stream on Twitch and Twitter or Periscope, and on YouTube and Facebook, we're doing separate streams. But every show, when it ends, will redirect to the next show. So when I end this show right now, it'll redirect automatically to get technical with Neil Hamilton. Let me just confirm if Neil is live, and if he is, I will send in the stream or send you all over to him, and he will talk some charts. I don't think he is live yet. Doesn't appear that he is. All right, let's just hang out for a few. I'll take any questions from the chat. Anything that's on your guys' radar. Oh, you asked for a name for my guest. Yeah, that's a good call every day, Papa. Bruce Liu is his name. WUGI is the ETF ticker that Bruce manages, and it's an actively managed tech ETF that's not from Cathie Wood, not from ARK, and I'm going to ask him all about that trade and what goes into that. So Bruce Lee, WUGI is the ticker for the ETF he manages. That'll be at like 3:10 today. And yes, we are working on getting a calendar up of all of our guests and all of our shows. Once we have it a little bit more solidified, then we'll be able to do that for you. All right, chat. Let's see what we got. Let's just hang out until Neil hops on, and yeah. What do we got here? Going through chat, going through. Oh yeah, we didn't get to Neo. Damn. I wanted to get to Neo. Yeah, I saw the price. I saw what's it, Jeffries. They had the price. They cut their price target from what 66 to 38.80. Let me share my screen here. Damn, good call on Neo. It was on my list too. Just kind of got sidetracked. All right, where's my Benzinga Pro? Yeah. See the price target lower to 38.80. So they still have a hold. They still have a neutral. But let's look at the stock. PreMarket. There it is right there. Opening gap down. Okay, so just like everyone else, we're just steadily moving up higher here this morning. Luke Jacoby's in the background. Not sure what he wants. Luke, should I be bringing you on here? No? Okay. He doesn't want to come. He's here in the background, but he doesn't want to come on. Yeah, Nia, I've been wondering, actually, the Jeffries cut made me wonder who, what the analyst sentiment was on Neo. If you go into the analyst ratings calendar here on Benzinga Pro, I'm actually surprised. It never really turned that bullish. I mean, Neo had that ridiculous run, but the analysts never, they raised their price targets, but they never really, there weren't a ton of buy ratings, right? Nomura had a buy, Deutsche Bank had a buy. That was kind of it, though. It's not a super heavily covered stock. You see, Jeffries is neutral. What else do we got? We got a sell from Goldman Sachs. They've been pretty active, right? Because you can see Goldman Sachs here. Look, they downgraded it. It's in October 2019. They downgraded it, or they upgraded it, and they downgraded again, and they downgraded again. But it's still not a super heavily covered stock. So the analysts never really turned bullish, despite the fact that Neo had that massive, if we zoom out, just massive rally there. God. Guys, remember this? Remember when Neo got all the way up and came all the way back down? I thought the stock was dead. There was that whole 60 minutes top, right? Gosh. That was like a year and a half ago. Thought the stock was dead. Damn. Missed that one. All right. What else you guys want to cover here? Let's see. Let's look at XPEV. I think they had earnings today. They did. Okay. 15 they made 15 cents per share per ADS. ADS just means share. That versus a 16 cent loss estimate. Okay, they delivered just under 13,000 cars in the fourth quarter. They expect to deliver a little less than that in Q1. That's interesting. A sequential decline in deliveries. See that very often. Pull up a chart. Wow. Everything opened down. I was going to call today's show, stocks are set to open lower, and they were set to open lower like 2 hours ago. A lot can change on the course of one morning. Look at that. Everything is just coming up. And we didn't get to oil that much. I wanted to cover that because oil futures are, hit 70 or just about 70. I hate to say it, but, and I know Dennis and Joel would say you're doing it backwards, but I don't know. I'm kind of interested in taking a longer term. I have no exposure to energy. I did own World.Shell, and I sold that for a loss, which was a mistake. But I own no energy in my portfolio, so I don't know. It's kind of hard. It's kind of hard to look at this rally and not have FOMO, which is what I'm feeling a little bit right now. Sam P, when is the fundamental analysis show? We're going to narrow down a date today. We're going to do a test show with a former Merrill Lynch banker turned VC. I will let you all know when we have a time and date for the Fundies show. And also, if you have a name, we don't have a name for it yet, but if you have a name, shoot me an email, premarket@benzinga.com. Fundies, I think something along the lines of fundies, because that's a fun word to say. But okay, I'm being told that Neil Hamilton is live, so I'm going to hop off the stream, and I will see you all back here at 10:30 a.m. Eastern Time for our Benzinga Pro update and news desk update. So everyone have a good rest of your day. Good luck at the Open. And Neil Hamilton, get technical, up next.